When you buy an insurance policy from us, you buy a promise that we will be there when you need us most. We are a sure shield against all insurable risks. We are Statewide Insurance Company.
So welcome once again. Thank you for joining us at this Statewide Insurance Company webinar, a critical analysis of fraud as a leading factor behind business failure. Of course, we'll be examining some of the causes of business failure, specifically putting a lens under fraud and how it can cause your business to collapse. My name is Daudi Mugabi. I work at Statewide Insurance Company as the Corporate Affairs Manager, and I'll be moderating today's session. Our guest speaker is Matthias Sekiranda. I will introduce him shortly, but for now, I just wanted to welcome each and every one of you to the webinar. Kindly take note of the questions that you have. There will be a Q&A session at the end of his presentations where we'll happily answer any questions. I am seeing our attendees here. We have Scovia from Gulu. Scovia, happy to have you here. With Derek from Kampala. Thank you for joining us, Derek, and Maureen all the way from Lira. Thank you so much for joining us in today's session. It's going to be a powerful one. And as I said, please take note of the questions. Now I'd like to introduce our presenter for the evening, Mr. Matthias Sekiranda. Matthias is a certified public accountant, a full member of the Institute of Certified Public Accountants of Uganda. He is a certified internal auditor and a member of the Institute of Internal Auditors. Matthias holds a bachelor's degree of science in accounting and finance from Chambogo University. And he is currently pursuing his MBA in finance and a certification in fraud examination, CFE. Matthias is also a certified CPA tutor. He has taught CPA for the last 5 years, specifically financial auditing, paper 1, and auditing ethics and assurance, paper 9. He has consistently made students not only pass the paper, but also have a clear understanding of the principles and their applicability. Through his learner-centered tutorials, several students have emerged as the overall best students at different sittings at the national level. Matthias holds experience in internal and external audit, financial management and reporting, fraud examinations and investigations. This has been gained through working in different industries coupled with different consultancy assignments handled. He has also demonstrated knowledge and skills in the areas of governance, risk, and controls, that is GRC. In 2025, the month of July this year, Matthias was awarded as the Young Male Certified Internal Auditor of the year 2025 by the Institute of Internal Auditors. So he is an award-winning certified internal auditor. And currently, as I mentioned earlier, Matthias is in charge of the internal audit department here at Statewide Insurance Company. So that's a brief profile of our presenter today. And Matthias, without any further ado, I would like you to go ahead with the presentation. Kindly try and share your slides to see if we can see them and take it away. Over to you, Matthias.
Thank you, Daudi. Hopefully my slides are visible to everyone. As earlier introduced, my name is Matthias Sekiranda, and I'll be taking you through today's webinar. My presentation will be strictly 30 minutes, so I'll not be talking too much, and I promise it will be fruitful. So today we are talking about fraud, and specifically occupational fraud. You realize that fraud is one of the most leading factor to business failure today. And when we talk about business failure, we have a challenge in that most of the businesses are run digitally today. So also digital transformation has, on the other side, brought up very many cases of fraud. But as we move forward, we shall see what really causes the fraud, who are responsible behind these high cases of fraud, and how can we prevent or reduce the cases of fraud. But before going any further, realize that different research has been done about fraud. One of the most prominent fraud research is by the Association of Certified Fraud Examiners that has made research about fraud for the past 17 years. And the results have been compiled, they have been studied, the trends have been, and we have gotten meaning out of these trends. This year, a US-based publication said that in the US, over 90% of the businesses are losing up to 9% of their annual revenues to fraud. So this is a serious problem that we have to handle at our workplaces. Oh. Okay. So this is our lineup that we're going to go through today. We shall see the overview and analysis of occupational fraud, the occupational fraud tree, how the fraudsters conceal these fraud cases, the fraud drivers, who is really committing the fraud and which steps are they really going through, the impact of internal controls onto the occupational fraud, what are some of the red flags that we can look up to and dig deeper to check whether fraud is happening, fraud detection, prevention measures, and how to carry out a fraud risk assessment. Just a simple overview here. I've already introduced what fraud, the picture of fraud, but also additionally, according to the Association of Certified Fraud Examiners, at least 5% of the annual revenues of different companies globally is lost to fraud. So just think of your annual revenue of your company. Is it 20 billion? If it's 20 billion, then 5%, a billion is lost to fraud. Okay? So you see that a billion, 5% may look to be small, but according to how much you make in revenue, it is actually so big. So that's why we need to actually wake up and see how to tackle this fraud. Most of these fraud cases come from operations, 14%, accounting 12%, sales 12%, customer care 9%, and that committed by the upper executive or upper management is 9%. It is also on research that frauds perpetrated by more than 3 people cause 4 times losses greater than those perpetrated by 1 person. So when fraud cases come up, we try to investigate them. How many people are involved in that case? How long has it taken? What magnitude of loss has it really created onto us? That is very key for the fraud examiners on call. When we talk about occupational fraud, we are meaning the fraud committed by our own employees at our workplaces. But fraud in general, as the definition of fraud, it is simply an illegal activity that is characterized by deceit, concealment, dishonesty, and misappropriation of assets or information. So that definition, someone is doing an illegal act, unlawful act, is against maybe legal or ethical standards. Someone is concealing something. There is unintentional deception, hiding of facts to mislead others. There is violation of trust. Violation of trust. And these fraudsters mainly, they take leverage of the trust we have in them. There is a prominent quote that the trust of the innocent, is the liar's most useful tool. So they normally take leverage of the trust that we actually have in them. So that takes us to what the IT experts always tell us, that in technology, they have zero trust. They have zero trust, and that should be the case. Even if the staff has been at work for over 30 years, we shouldn't really show them that we overtrust them, because normally that's where problems come from. They leverage on the trust so that they go ahead and do what they do. So occupational fraud normally is categorized into three. Asset misappropriation, we shall see it in detail, corruption, and then financial statement fraud. Financial statement fraud. We shall see this in detail as we move on. So, and those three, they form what we call the occupational fraud tree. Now, when we talk about corruption, the different categories of frauds under corruption, one of them is conflict of interest. We know that when there is conflict of interest, it is, it impairs objectivity. It impairs objectivity, and then it breeds grounds for fraud. Then bribery, we have bid rigging, those who do bidding. We have invoice kickbacks. We have economic extortion, that is a direct confrontation, and you give someone money, or you ask for someone money for a material gain. Then the asset misappropriation, which is the common occupational fraud. We have scheming. And when we talk about scheming, here we are talking about because it has two categories. Scheming has two categories, but scheming simply means you take cash before it is recorded in the books. This is common in organizations that normally use cash in their operations at offices. Someone receives money from a customer, they take money before it is recorded in the books of accounts. Normally, this money is gotten from your customers, from your debtors. Someone has made a sale, they have not put the money in the safe. Because you are cash intense, you may not notice that some money has not been recorded in the books. But this kind of money, this kind of fraud, scheming, especially for receivables, it can easily be detected. It can easily be detected because at one time in point, these debtors will become delinquent, and you will actually be able to notice that these people have been outstanding for some, and you now dig deeper. Okay, but also these fraudsters are not seated. When they know that they have schemed someone's money, debtor's money, they try to practice what we call larding, teaming and larding. I've eaten customer A's money, customer B has paid, I use customer B's money to cover up customer A's debt. As I wait for customer C to pay, and I use customer C's money to cover up customer B's money. But that cycle continues. But however, that person, the moment that person goes on leave, or that person is away, you can easily notice if at all you have strong mechanisms to do that. So that is scheming before it is recorded. And then we have what we call cash larceny. Cash larceny. When we talk about larceny, this is the theft of cash that has already been recorded in the books. We can also detect this. We can also detect this because for it leaves an audit trail. It leaves an audit trail, and we can always find a way of detecting. Then we have fraudulent disbursements. We have fraudulent disbursements. For example, you have ghost employees, that is payroll. You have ghost loans if you are dealing in giving out loans. Then we have fictitious expenses. You have cooked expenses. We have false refunds or discounts. Some people, after eating customers' money, they disguise as if they have given them discounts to cover up the money that they ate. So all that is fraud under asset misappropriation. Then we have financial statement fraud. This is not so common, but it is actually done. This happens. One of them is it is done through timing differences. Timing differences. Someone knows I've received revenues. A client has made an upfront payment that you have to deliver maybe in the next period or next year, and the year is ending. Someone has paid for goods worth 50 million, and you are to deliver in January next year. Because you have not yet delivered in accounting, that is deferred, not deferred income. It is not considered as a revenue, okay, as an income yet, because you've not yet performed an obligation as per IFRS 15. So what happens? Most companies, they recognize that revenue this year instead of recognizing it the next period in which that money will be earned. So that is fraud. That is financial statement fraud. Then we have fictitious revenues. I think it is in line with the timing differences. Then we have improper disclosures. We have improper asset valuations. Okay? Improper asset valuations. We know that we have to, let me say, revalue our investment property, but we influence the results of the valuations. We have to revalue our assets, but we go ahead and influence the results of the valuations because we want to report an income somewhere in the financial statements. We have overstatements and understatements that are known because we want to achieve a certain position on our profit or loss. Okay. Another research has shown that these people, they have altered physical documents. Okay. The documents are already there and they have tried to alter them to suit what they have actually committed or to match what they want them to look like. Some of them have gone ahead to create fraudulent electronic documentation. Okay, we have seen that. And for fraud examiners, you know how to check a fraudulent electronic document. Of course, we have features that we can look at. For example, the barcodes, for example, any security features in that document, and so on and so forth. The addresses, you can compare them with the original addresses, the contacts, and other features. Then some have gone ahead to alter those electronic documentation. We've seen people converting an electronic document into Word, and they change whatever information they want and they convert it back. So we have to also be very keen on that. Some have gone ahead to destroy or withdraw these physical documents after making or after committing the frauds. You look for a particular document, nowhere to be seen. So we have to learn to back up the information. Okay. Then some have gone ahead to create fraudulent transactions in the system by creating fraudulent journal entries and the like in the system. Some have even gone ahead to delete data from the electronic system. As long as they learn that the system is weak enough, it may not store this trail, because we've seen those systems that have that gap, that control gap, and it can't show who deleted at what time, when, as long as a fraudster gets to know such, he will go ahead to delete because he knows he has a fallback position. Even if you go back, you may not trace. Okay. And so on and so forth. So these are the different mechanisms that these people go ahead to use. Some create fraudulent journal entries. We've seen that. Okay. And when you try to follow it up, it was even never approved, but it went through and it was paid because maybe there was some connivance, okay, amongst different staff. Then we have what we call the fraud drivers, or what we normally call the fraud triangle. The fraud triangle versus the fraud diamond. So when we talk about the fraud drivers, these are the factors that push these fraudsters to commit the fraud. Now, the fraud triangle, these are the original factors. And number one is the pressure. These people, in most cases, they do commit fraud because of the pressures behind them. For example, they might be having family pressure, school fees, a family member is sick and the bill is so heavy. Whichever pressure they may be going through, maybe peer pressure, someone wants to buy an iPhone 16 Pro Max, someone wants to know, that pressure behind can force someone to commit the fraud. Then the opportunity is that circumstance that allows this person to commit fraud. Now, the opportunity, this is the only component of the fraud triangle that the company has control over. Because the things that give these people opportunities, most of them we have control over as an organization. And these are the controls. The moment our controls have lapses, they give opportunities to these people to commit the fraud. So we have control over the opportunity. So as we managers, employers, this is where we have to look most when we are trying to prevent the fraud, the opportunity. Okay? Because for this fraudster, he's seeing weak internal controls. There is a poor tone at the top, he's seeing even our top executives, top managers are committing fraud. Okay, so that tone at the top, we are not enforcing that ethical atmosphere and commitment to integrity and honesty and accountability. So he takes he uses that chance to also commit. He's seeing an opportunity because there is no supervision at all, or there is inadequate supervision. That is opportunity to him. Okay, then another factor is rationalization. Someone tries to justify why he's committing fraud. After all, I'm receiving a small salary and I'm overworked. Okay, that is rationalization. Okay, after all, even my manager is committing fraud. Okay, after all, I don't have any other solution. This is where I have to get money. That is rationalization. You try to justify the reason as to why you're committing fraud. Now, when we go to the fraud diamond, all the three stand apart from capability. Now, the capability, one scholar said, you might be having all the three. You might be having the pressure, you have the opportunity, you have the whichever reasons you have, you can rationalize. But when you don't have capacity to commit, you don't have the skills and the means to execute the fraud. So that is the capacity, which is also a very key component of the fraud drivers that makes up a fraud diamond. So it is pressure, opportunity, rationalization, and the capability. The skills and the means to execute is also very, very key. Because even if you had the opportunity, but you are not brave enough, you are not skillful enough to commit and conceal, you may not succeed. So capability or capacity is also very important in driving this fraud. So businesses should be very much aware about these factors and avoid any circumstances that can give room for the fraudsters to commit the fraud. So after this fraudster getting that intention to commit fraud, after getting the opportunity to commit the fraud, he has seen a weak internal control somewhere. He has seen that there is lack of oversight or supervision. He now gets the motivation. These are the steps. He gets the motivation to commit the fraud. Okay? Maybe now the pressure comes in. He has to take his girlfriend out. He has to buy a new car worth 100 million. He has to construct. He has to take the children to posh schools. So the motivation comes in, and then the fraudulent act is triggered. He commits fraud. After that, immediately, he will look at concealing using any of the other methods that we used, that we saw, even other methods convenient to them. Then, after concealing, for him, he thinks that he has concealed. Actually, the fraudster's greatest liability is his certainty that the fraud he has committed, that he's too clever to conceal the fraud he has committed. Okay? That is his greatest liability. For them, after concealing, they think everything is done. But then there is the detection part. We shall see how we detect these frauds. Of course, internal audits, management reviews, external audits, data analytics, whistleblowers, and other mechanisms. So that's when the detection comes in, and eventually we respond to this fraud. But also, we should avoid being reactive in fraud management. Actually, good fraud management needs a proactive mechanism. If we are to curb down fraudulent cases, we have to be proactive. We shouldn't wait for an incident to happen for us to wake up and see what we are supposed to do. At the end of the day, we can wake up late, and yet the impact is actually too huge for us to handle. Okay. Research has also shown that most occupational frauds are as a result of insufficient internal controls. Managers on this call, at least you can attest to this. Most of the frauds are as a result of lack of internal controls and then override of the existing internal controls. Those are the major two. A fraud happened because maybe there was no controls, or maybe because there was override. We've had cases in banks whereby monies have been stolen. The most prominent case was of Aida Atiku, the digital banking fraud. It was this year where she lost 2.2 billion, okay, through unauthorized online banking transfers. And when this case reached court found it that however much the platform she was using was customer controlled, but court ruled that the bank failed to implement adequate controls on the platform, okay? And the bank overlooked the red flags. So it was about controls. Controls is very, very key. And other cases that really happen, but we don't actually. Another one was about mobile money some years back, MTN, which whereby 10 billion, over 10 billion was lost through fraudulent selling of float to ghost agents. Over 10. Because why? Because of the controls internally. So controls is very key. If you want to curb down fraud, controls should be at their best. We should revisit and review them periodically to check whether they are still serving the intended purpose. When you look through the perpetrators' positions, the owners or executive also commit frauds on their own companies. And also the lack of internal controls and control override takes lead. Employees also, those are the 2 points that take lead, and managers the same thing. So controls. Management review also comes in because management has to periodically visit and review these controls, whether they are actually serving the purpose they have to serve. And research show that frauds committed by executives actually cause higher losses than frauds that are caused by the lower staff. So executives, why? Because for them, they have access, okay? They have that advantage or that privilege that they may not be questioned. They have the privilege to conceal because they have all the time to get whatever documentation they have to do, get to conceal. So however much in numbers, frauds committed by lower staff is higher in numbers, but in terms of the value of the frauds committed, the executives, senior management, and the owners, their frauds have higher values and therefore impact a lot organizations. These are some of the red flags that the fraudsters have exhibited in the research that has been conducted for the past 16 years. Living beyond their means, that's number one. Financial difficulties, some of them actually pretend living beyond their means is an indicator, but also we shouldn't forget that some even live below their means. Someone is earning, for example, 10M, but someone comes to work with, let me say, a torn shirt, just to show that maybe he's not actually in a good position. It may also be an indicator of fraud because they are actually pretending. Then we have financial difficulties. Of course, because if someone is facing financial difficulties, it is a breeding factor to get the other motivation to commit fraud, to sort out his financial difficulties. We have an unusual collaboration with the vendors. We have different employees that they are so close to the vendors. You've seen those at your workplace. No, in most cases, that's where problems start from. Research shows that 16% of the cases in the last 16 years have not shown any behavioral red flag. Some stay normal. This is the real person. This is the normal person you've seen for the past 3 years. No, he does not change behavior. He does not change lifestyle. They stay normal. It is also possible. That does not mean that fraud is not happening. Okay. We have control issues like unwillingness to share duties. Okay. Some people don't want to go on leave. That will lead the attitude. Someone is so aggressive, cunning, Then we have bullying and intimidation. Someone gets, uncomfortable when you go and ask things. They are so defensive and suspicious. I think internal auditors, you faced this before. Someone is so defensive, even if you're asking something small, they are so defensive. It is one of the indicators, and other indicators. But at least 75% of the fraudsters have displayed at least one of the top 8 red flags in the research that has been done. Okay. And fraudsters living beyond their means, because some people get so excited after getting this money, so they begin getting things at a very high speed. When we talk of detection, these are the different mechanisms through which fraud has been detected, the most effective mechanisms. I don't know, you might be having a different version or a different statistic, but at least from experience, or from the internal audit experience, most of the frauds I have detected, they have been through whistleblowing, through tips. So that can only be possible if we actually create an environment that these whistleblowers feel comfortable to whistleblow, are well sure that they will not get any retaliation, and well sure that they will be kept confidential. So the tipping 43%, according to the research by the Association of Certified Fraud Examiners. Internal audit, frauds that have been detected by internal audit 14%, management reviews 13%, document reviews 6%. We are seeing external audit 3%. And someone might be wondering why external audit 3% and internal audit 14%. These two different audits have different scopes. Okay, we have a different scope when we are dealing with audits at internal and external audits, and the objective of the audits are normally different. And then the tipping, the 52% is from the employees themselves. When you create fraud awareness, and there is an anti-fraud culture in a workplace, employees will feel comfortable to disclose these irregularities that are going on. So 52% of the tips have come from the employees. The customers have actually contributed 21%. And some decide to stay anonymous, 15%. The vendors have disclosed 11%, because we have the vendors that have really with whom you have a good working relationship, that they feel that an employee conniving with them to defraud the company is actually wrong, because they are also in business. They end up disclosing. But those ones that have confessed by themselves, it is 1%. Of course, no fraudster can come out easily to confess. But we are saying, on average, these cases have been detected after 12 months. And we know that the more a fraud goes undetected, the bigger or the higher the impact it will create onto the business. How can we mitigate, therefore? Strong internal controls. Let's advocate for segregation of duties. Let us separate duties that are incompatible. Okay? Don't make procurement to make payments. Okay? Don't make audit do accounting. Okay? We have to put responsibility or accountability lines. We have to bring in approval hierarchies or approval levels. Enforce mandatory vacations or job rotations. Mandatory leave. Some people don't want to go on leave because they know once they go, the fraud will be detected. Let's also carry out robust recruitment practices. Let us do thorough background checks on our employees before hiring. Let's not take it as if we are just ticking a box, okay? Because we have to do reference checks. Let us do thorough. Some organizations, when doing reference checks, they give a reference check letter to this prospect that they intend to hire to take it to the former employer. So what do you expect? Okay, let us do an independent background check on the prospects. Then carry out reference verification and integrity screening for your staff periodically. Okay, integrity screening periodically. It can be twice a year or once a year to check. Then clear policies and procedures, code of ethics. Do your employees sign code of ethics? Okay, all your employees. Do you have clear anti-fraud policy and zero tolerance to fraud? Okay, is it working or it is just on book? Do you have a clear whistleblower protection policy? Are employees comfortable that even if I disclosed any impropriety that is happening down there, I'll be safe? Okay, they need to first get that comfort that they will be protected. Can we come up with training sessions to train our staff about fraud, about the impact of fraud? Because at the end of the day, it is from the training that people will actually come to appreciate. One scholar said that a strong weapon in the fight against fraud is awareness. You can't be trying to fight fraud and yet people are not even aware what fraud is all about. Okay, what fraud can actually impact. Then strong corporate culture. This is where we talk about the tone at the top. Our managers, are you actually demonstrating what you actually speak? Are you promoting integrity? Okay, the tone at the top. Then can we reward integrity, not just results? Yes, we can reward results, hitting targets and what, but can we also start rewarding integrity? Can we also add integrity on one of the can we also add fraud management on one of the KPIs of some of the managers? Okay, so let us also learn to reward integrity other than results. As I plan to conclude my presentation, these are some of the anti-fraud controls that you can pick up and also take and implement. We've talked about the code of conduct. It is very key, okay, because staff should always know what they have to follow and what the entity believes in. Can we also advocate for external audit of financial statements? Some organizations, medium-sized organizations, surprisingly, they don't do external audits. But when you get an independent eye to look into your financial statements and give an independent opinion, it gives some degree of comfort. We have management certification of financial statements. Gone are the days when, after preparing financial statements, after the finance manager, CFO, accountant preparing, sends to the CEO to sign and the board chairman and board secretary to sign. Today, the law is very clear. The preparer of the financial statements has to certify by appending his signature, his name, and his membership number. CPS so and so, and your membership number. Okay, this is rooted from the Sarbanes-Oxley Act of 2002. Those who want to read further, this Sarbanes-Oxley was introduced because of the major financial scandals that happened in the US, the WorldCom and Enron, whereby management was falsifying financial statements, practicing creative accounting, showing the shareholders that we are doing well, yet at the back, we are actually doing so badly. And fraud was at its peak until when these companies filed for for bankruptcy, and they collapsed. And we know what happened later. So from this Sarbanes-Oxley, they said one of the resolutions was the preparers should always commit themselves that what they have put in the financials, it is actually what is transpiring. Because the CEO who signs, the board chair who signs, may not actually be in position to know what is happening in the books down there. So it is this person, the preparer. So it is a very key control that management certification of financial statements should actually be enforced. Okay? Because by putting your signature, you attest that what you've put, you actually were confident about the figures there. The internal audit department, for those who don't have, it is now another eye in corporate governance. I will not speak much about that. And then we have external audits of internal controls, management review. Some organizations have gone ahead to put a hotline so that the staff are actually comfortable disclosing. Okay, disclosing. And some people, this hotline is managed by an outside party, what they normally call an ombudsperson, an outside party, so that the staff get that real assurance that even if they disclosed, they are actually their identity is concealed. Then the independent audit committee is also a control, because it empowers the internal audit department, and also it helps to oversee most of the control activities on behalf of the board, and other controls as we see them here, anti-fraud policies, trainings, and so on and so forth. We talked about the fraud risk management. What does it entail? It entails these 5 things. You must know how to govern, okay? Fraud risk governance. Do you have the policies in place? Do you have the known processes and practices in place? Who are the people responsible for fraud? You know, if more than 2 people are accountable, then none is accountable. You must get a person or a department that is accountable for fraud risk assessment and management. I know this falls under the first line of defense, okay, the business owners. But who is accountable? Yes, they will be accountable at that level, but who is the coordinator that is accountable to also go and check onto these people? Okay, fraud governance is very, very key. Is very key. Then we have the fraud risk assessment. Okay, how do we do that assessment? You identify the potential risks that may cause fraud. Okay, after identifying them, you have to measure them. Okay, you have to measure the risk, and while measuring, we normally score them. Okay, we normally scale them, and then we have to come up with mitigation measures. You must also assign a responsible person to each risk, because we said accountability is very key, and that will ease your follow-ups. And then you have to report and monitor. After reporting, you have to monitor to see whether the exposure has reduced to the tolerance levels that management can take up. One of the prominent writers gave that quote that fraud is like any other virus. The fraudster, once not detected, will mutate the fraud. and I'll agree with him. The moment we don't detect the fraudsters amongst us, before you know it, almost all members in the department will be fraudsters. Because once you don't detect them, they go on spreading the gospel. Most of the frauds are involve more than one staff. Most of the frauds, it is a connected fraud, it is a syndicate. That's why whenever there is a fraud, during fraud investigations, we have to actually establish who were the fraudsters in this fraud, everyone that was involved, and then how long did it take and the impact it has caused. Because once you don't ascertain, you may think that you have gotten one of them, yet actually you have left 10 of them, and the vice will keep on going on. We've not gone through the magnitude of the monies that have been lost in different scandals, but I guess what we've presented will actually give a good start. Thank you, Daudi.
Thank you very much, Matthias. A round of applause for Matthias. We can use our emojis or whatever emoticons we can to appreciate Matthias for a wonderful presentation. I'm sure all of us have learned a thing or two. Now we have about 7 minutes to go till the hour. We had promised to keep this to 1 hour. If you have any questions, kindly either type them in the chat or raise your hand and you will be given an audience to ask away. As the rest of the colleagues do that, I see a question here in the chat. That's from Josephine. Thank you, Mr. Sechiranda. Please, can you explain to me once again the rationalism under the fraud, the rationalization rather, under fraud triangle? So there is some clarity needed there, the rationalization under the fraud triangle. Are there any other questions so that Matthias can tackle more than one at a go? We'll just give a few seconds for other people to either raise their hands or type in the chat in case they have any written questions. I'm seeing other questions here, Matthias. It was indeed a great presentation. Is it possible to share the recordings? Yes, we shall have the recordings live on our YouTube channel. Once this session is done, that should be readily available for you this week. So feel free to visit our YouTube channel where you'll find this webinar recording. Any other questions for Matthias to tackle apart from the triangle? Okay, there is one other question here. This is from Bello. Thanks for the presentation. Can you provide relevant local examples in the Uganda context, and how ready are we? Yes, so I think those two will do for now, Matthias, the triangle and a few relevant local examples.
Thank you, Daudi. I'll start with the rationalization. Rationalization, this is where the fraudster tries to justify why he's committing fraud. For example, most of the fraudsters that are at the junior level, they have this in mind that I'm underpaid and yet I'm overworked. So that one reason can push him to commit the fraud. For example, he's seeing one of the managers is also committing fraud. So he's like, no, after all, he's also committing fraud. Okay, let me also do the same. For example, no, I'm just borrowing this money, I'll return. It is a reason to justify. Before he knows it, he will also come back the second time, the third time, not like that, like that, like that. So that is rationalization. When I come to the local examples, I think I had given the most recent one of Atiku Ida, who lost over 2 point something billion because of to fraud. That was online banking, and then have given the one of MTN, and the one of MTN was actually involved 6 employees, and these were actually ex-employees, and among them we had the head of finance, and then we had also some staff in the mobile money department. These people had left. They had been fired, but when they were fired, surprisingly, they were not their usernames in the system were not deactivated. Just imagine. These are the controls we are talking about. The systems, the usernames or the user rights were not deactivated. So they kept on accessing the system even when they were outside the entity. And yet on top of that, they had committed the fraud when they were also still within the entity. So I think that is also another example of the fraud and most of them, they go unnoticed because most of the organizations don't come out in public to do what? To actually disclose what is happening inside. I submit.
Thank you, Matthias. There is one more question here from Florence, and that is, what if the tone at the top is silent about the management fraud? How do you escalate such scenarios? In other words, what if the big fish are involved as well? What do you do then?
Thank you so much, Daudi. Now, the challenge with the tone at the top, because it depends at what level. If it's because senior management normally reports to the board, now the board will have to come in. Now, if the board is now the challenge, now that is in the hands of the shareholders, because it is the shareholders that entrusted them with that oversight role. Now, it depends at which level. If the shareholders, if it's the board, then automatically shareholders will not sit back as they see as their capital is being swindled. If it's senior management, the board will have to wake up and get measures to curb down the vice.
Okay, thank you very much, Matthias. The rest of the comments, many of them are appreciating the presentation that you've made for us today. And at Statewide Insurance Company, we are happy to have such platforms where we can share our knowledge with the general public to educate you on the different facets in which we excel, such as fraud, financial management, and of course, insurance. So thank you so much to everybody that has joined us today. We promise to have such engagements in the future. We'll have more of such webinars that are not just talking about insurance, which is our bread and butter, but other topics that can benefit you as our stakeholders and clients. So thank you so much for joining us today. Remember that this webinar will be available in the form of a recording on our YouTube channels later on this week. So visit our website, www.swico.co.ug, for more details on this webinar, or our YouTube channel and social media platforms where we shall share the recording of this webinar. Once again, if you need any insurance advice or protection of your assets, feel free to reach out to us at Statewide Insurance Company, where we can help you with all your insurance needs. Our head office, of course, is on Bombo Road, Plot 1. That is Shua House, in the second floor, where you can interact with anyone at the front desk or get in touch with our very own presenter, Matthias, in case you need any further advice on fraud. Once again, thank you so much for joining us, and I wish you all a wonderful evening. Thank you.
When you buy an insurance policy from us, you buy a promise that we will be there when you need us most. We are a sure shield against all insurable risks. We are Statewide Insurance Company.